Alright everyone, Cowboy Trades here. Welcome back to the channel for another update on Bitcoin. It feels good to be back. Thanks for sticking around while I've been away for the past week. Like I did say before I left the channel, I was going to be away for a little while, enjoying time in London, spending time with friends, and of course, it's been Christmas time. So before we do jump into the content, I do hope you all had a good Christmas if you do celebrate that. But it's almost 2023, which means it is time to get back to work. Let's talk about everything we missed while I was away from the charts. Now, yes, there are a few TA updates that I do want to give you. These are going to be in a separate video because right now, a lot of news events, number one, news events, number two, on-chain metrics, and number three, fundamentals are far more important. And I want to discuss these with you quickly before we do make a TA update. So let's dive into the news. Now, Bitcoin miner Core Scientific has recently just filed for bankruptcy. We've been talking about these minor capitulations on the channel for quite some time now. We gave you an update about the minor capitulation 4 weeks ago, but just quickly, if you don't know why the bankruptcy of Core Scientific is so detrimental to the Bitcoin ecosystem, it is because they hold collectively 10% of the computing power of the Bitcoin network, operating over 143,000 mining rigs and hosting another 100,000. Now, this is the biggest Bitcoin mining company that has gone default so far, so definitely not good for the price action or the hash rate, which we will talk about in a second. And also, if you want to know, their assets were estimated between 1 and 10 billion, whereas at the end of the third quarter, their assets stood at 1.4 billion and their liabilities are about 1.3 billion. So obviously now their liabilities will outweigh the assets, so their liabilities are probably more than 1.4 billion and their assets are probably less than 1.4 billion right now, meaning they are insolvent. They're going bankrupt, and they are of course filing for bankruptcy. Definitely not good for the price action. Now, I believe about 4 weeks ago, we talked about another very similar situation where Iris Energy was defaulting on a $100 million loan, and the hash rate did take a little bit of a hit since then. Now, if we do come over to Iris Energy Limited, if we come over to their stock price, you can see this has been absolutely tumbling, and this ties in hand with, what we've been talking about with these mining videos. We've been talking about the profitability of mining going down. A lot of these mining firms are, their stock prices are absolutely crumbling through the floorboards, and now we've got Core Scientific, which are probably going to be starting to sell, round about 143,000 mining rigs. How do you think that's going to affect the hash rate? Well, let's go and check it out. It's been 1 week since this story came out, and what has the hash rate done in the past week? It is absolutely crumbling through the floorboards. This is where I left, round about the 22nd, 23rd. The hash rate was sitting peachy, round about 240 million, and as you can see, it's coming all the way down to 224 million right now. So if we do refresh the chart, you can see a lot of the time, in fact almost all the time, you see these minor capitulations. You see the hash rate. It's kind of hard to see when you zoom in. You can see hash rate takes a crumble, and then the price also takes a massive crumble to the downside. You can also see this first major rock to the downside when Bitcoin was trading around about 65,000. When Bitcoin came down before making that double top formation, price went all the way down to 33,000 because of this massive drop in the hash rate. And once again, looking at this this market situation right now, this looks like one of the biggest drops in hash rate we've seen since all the way back here. Once again, Bitcoin was trading around about 50,000 and dropped all the way down to 33,000. Now, we also talked about this 4 weeks ago when Iris Energy started defaulting on their $100 million loan. This is what at the time caused the hash ribbons indicator to flip to the downside. Now, what do you think is going to happen now? The hash rate is absolutely plummeting through the floorboards. Well, remember the hash rates, or the hash ribbons indicator rather, is simply your 30-day moving average and the 60-day moving average of the hash rate. So these haven't even really started to fully price in what's been happening with Bitcoin miner Core Scientific filing for bankruptcy. So hash rate is plummeting through the floorboards. Hash ribbons indicator is also taking a nasty capitulation, and you can see a lot of the time, the hash ribbons capitulation is marked by these pink bars over on the screen, and this looks like it's going to be becoming a sizable move to the downside right now. Now, some of the most sizable hash ribbons capitulations were, once again, right here. We talked about this one from around about 50,000, 58,000, all the way down to when Bitcoin was at 33,000. This is what we talked about right here. And then also, if we do look a little bit further back in the hash ribbons indicator, you can see it wasn't until miners started capitulating, becoming insolvent, defaulting on loans back in 2018, until, the price bottomed. And as you can see, Price bottom around about $3,200. The hash ribbons indicator crossed bullish around about $4,000. So, if you were waiting for the hash rate and the hash ribbons indicator to flip bullish before you were buying, you were pretty much buying the bottom for Bitcoin. So the hash ribbons indicator is definitely going to be something that I'm going to be looking at personally to help me decide when I will be buying Bitcoin. Of course, I do think Bitcoin has further to go to the downside. I do think more firms are going to become bust. And, if you come and check out the channel, if you look at some of the miner videos, we've also been talking about liquidity crunches. Liquidity crunch. We've been talking about this for, 1 month, 5 months, 6 months or so. And, what happens with these liquidity crunches is kind of similar to the miner crunches. Now, with liquidity crunches, we've been talking about, 5-6 months ago, we were saying get your crypto off exchanges when Celsius, Voyager, Luna were going bankrupt. And we told you 5-6 months ago that this was going to continue bleeding out into new firms. This is, of course, going to cause more exchanges to go bust. And then when more exchanges go bust, this will, of course, bleed into mining firms. And this is what we're seeing right now at this moment in time. Hashrate going to the downside is definitely not looking good. Now, literally in the past week or so, since Core Scientific has filed for bankruptcy, of course, the hash rate has dropped. So what does this mean? Well, of course, they're unplugging their equipment, but they're probably starting to sell their equipment right now. So in the past week, we have also seen the Bitcoin mining sell pressure take another big run to the upside. And of course, this hasn't just been in the past week. We made a video about this probably about a month ago. You can see the mining sell pressure really started to kick in around about the 17th of October, and it went for a massive run to the upside. Now, I do just want to clarify before I do move on from this point, Bitcoin mining sell pressure is not the end all and be all. While it is, a bearish technical, like if you're thinking about it from a fundamental perspective, I did make a thread about this over on Twitter, as you can see over here on the 30th of November, about a month ago. I was letting you know that, the sell pressure was up over 543% in the last 6 weeks. And this was a month ago, so probably in the past 10 weeks, it's probably up 600, 700, 750% approximately, but you can see in red I've got some vertical bars, and you can see mining sell pressure went up, mining sell pressure went up, price went down, and price went down. But on the other hand, you can see mining sell pressure went up with this vertical green bar, and mining sell pressure also started to go up with this vertical green bar. And what happened after this? Price went up and price went up. So far, out of Bitcoin's entire trading history since, we've got this indicator back in, 2009, 2010, 2011, there's been 4 instances where we've seen, mining sell pressure take a significant run to the upside. And it's been very 50-50 so far, whether it's a bullish or bearish indicator. So I much prefer to kind of pair this with looking at fundamentals, looking at technicals, look at what's happening in the rest of the market, looking at on-chain, hash rate, hash ribbons indicator, capitulation. Of course, we have to tie all of these things together. Just wanted to let you know, Bitcoin mining sell pressure in of itself doesn't tell us too much, which is basically what I said over on this point. But of course, this leaves bearish sentiment in the market. Now, moving on to some on-chain metrics before we do wrap up this video on my final thoughts, let's come over to the Bitcoin active addresses. Active addresses are once again pushing up. I won't spend too much time explaining this because I imagine many veterans on the channel already know exactly what this is, but from a technical perspective, like I said, I've explained the fundamentals of this so many times that I won't do so much anymore, but you can see active addresses take a spike to the upside, and it often correlates to a top in price action. Not always. You can see over in this instance, active addresses actually went up when price was going down, and this just allowed for more continuation to come into the market. Over here, boom, you can see active addresses topped out, and more or less this was right here as price was topping out and slowly rolling to the downside. If I do zoom in, you can definitely see it looks more bearish. It looks more, not so bearish than it actually is. But if I do zoom in, you can see, price did start to roll back to the downside after this instance over here. Now, if we do look at what's going on right now, you can see active addresses are once again taking another push to the upside, and price is coming to the downside. So I do expect active addresses to become a little bit more active in the network over the next week or two, maybe the next month, maybe the next 2 months. I do expect this to take another run to the upside, and of course I do expect this to correlate to a further move back to the downside in terms of the price action. I'm messing up the chart. I cut my finger yesterday, so I'm probably a little bit finicky with my hands right now, so do bear with me. Over on the let's check out some other on-chain metrics. The addresses with a balance of more than 1 Bitcoin. So we're generalizing these because, of course, if we look at the addresses with more than 1,000 Bitcoin, there's not too many of them. So mainly when we're looking at addresses with more than one Bitcoin, yes, there might be a few whales in there, but as a majority, most of these people are going to be shrimps, crabs, you know, small money inside the market, basically retail traders. And with this, you can see they are, once again, since I've left the channel in the past week, they are still drastically accumulating to the upside. We look at this because we like to do the opposite of retail traders. Why do we like to do the opposite? Well, we talked about this before. What happened when Bitcoin was at 10,000, 11,000, 12,000, 13,000, 14,000? Were they buying? No, they were selling, 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 selling. You can see just at this bottom, over here, they started drastically accumulating. So they didn't want to buy at 10, they didn't want to buy at 15, they didn't want to buy at 20, they didn't want to buy at 25. When did they start buying? They started buying right here when the price was at 40,000, which was more or less the exact top. So who was selling to them in this market scenario? Well, let's go over and check out the whale wallets, the smart monies, the addresses with more than 1,000 Bitcoin. What were they doing when Bitcoin was trading at 10,000, 9,000, 7,000? They were buying, 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 buying. And when did they start selling? They started selling when retail was buying. You can see up here at 46,500. Yes, they didn't call the exact top, boohoo. They almost called the exact top. And since then, they've been dumping to the downside. They almost sold the exact top, and now they're more or less just sitting on the sidelines and stagnating. Now, since I've been gone, I can't really say that they've been selling. You know, literally in the past month, we've more or less been at the same levels. As you can see, a lot of the time we have these like little rounding bounces before we do head back down, and this is really what I see happening right now. Not too much to update in terms of what the whales are doing, but the fact that when we pair these two charts together, when we look at what retail's doing and when we look at what institutions are doing, we can surmise this with the Bitcoin ratio. We can surmise this with the Bitcoin ratio of retail to institutional addresses. Once again, we've talked about the fundamentals of this many, many times on the channel, but all you really need to know is when the blue line goes to the downside, institutions are more active in the network than retail traders, and in comparison, when the blue line starts to go to the upside, this is an indicator that retail traders are becoming, you know, the dominant force in the market. So why would you really care about this metric? Well, once again, I mean, when we look at who was the dominant force in this market, like we said, when Bitcoin was at, you know, 10,000, 7,000, 20,000, whatever you want to say, this is when institutions and smart money were piling into the market. So we saw the blue line go to the downside, causing this bull run. If you remember, you know, your Cathie Woods, your Michael Saylors, your Teslas, Grayscales, tons of people were putting Bitcoin on their balance sheet back in this time. And of course, as you can see, you know, when this ratio started to move back up to the upside, Bitcoin was at 46,500, institutions were done accumulating, and they started selling to retail. So all I really have to update you on is institutions are still on the sidelines, retail is still buying, blue line is going to the upside. This is still a very bearish indicator, indicative that, you know, whales are very happy sitting on the sidelines while retail buy their coins. Now, wrapping up the video, right now Bitcoin funding rates are heavily in the green at this moment in time. So why is this important? Well, a lot of the time, in fact all the time, if you're trading in this market, if you're trading with futures contracts, or, you know, no matter what you're trading with, you're going to have to pay a funding fee depending on what side of the market you're on, if you're a long or if you're a short. And when the funding fees are in the green, it just tells us that because longs are dominant at this moment in time, that long position traders are willing to pay funding fees for short traders. And if we're looking at the price action right now, I wouldn't necessarily mind, well, I'm not entering a short right now, but I wouldn't mind entering a short and having, you know, people who are bullish in this market pay for my funding fees. So typically when you are in the green in terms of funding fees, you can see this in terms of the price action. You can see when longs are happy to pay for the funding fees of shorts, this is normally when price action starts to move to the downside, and it isn't until the funding fees turn negative, meaning that the bears are willing to pay funding fees for the longs, it's not time for a bottom, or a local bottom should I say, until the funding fees turn back negative. You can see this large red candle to the downside, pretty much correlated to the bottom over here in terms of the price action bounce. Over here you can see funding rates turn negative after this massive run to the downside. What did this correlate to? Correlated to a local bottom before a bounce. What about this capitulation to the downside? You can see we just started rolling over, funding fees turned heavily positive, and price nuked to the downside. When was the bottom in? Well, the local bottom was in once funding fees started to turn extremely negative down to minus 0.07%. And you can, you know, look at this chart, you can zoom out, you can zoom in, you can do whatever you want, but in general, in fact, pretty much all the time, when funding fees are in the green, it is a sign that you should probably be on the other side of the spectrum. You should probably be short, and you should be happy to allow, you know, the long traders to pay for your funding fees for the next short. So at this moment in time, you know, with liquidity conditions dampened, considering we've already had a liquidity grab, I'm going to do a little bit of TA a little bit later on. I really don't want to focus too much on TA in this video. I really wanted us to digest the news, the fundamentals, the on-chain metrics, which in my opinion are far more important than the technicals right now. But all in all, Bitcoin is coming down to this trend line, which is also, you know, the bottom of this bear flag range. Funding fees are still in the positive, and there's a lot of signals and a lot of signs that I will talk about in separate videos, also, of course, including everything we've talked about in this video, which makes me feel like we're going to start tipping to the downside. People are going to start entering shorts, you know, bulls are going to be trapped paying those funding fees for the bears, and, you know, in my opinion, this next capitulation is right around the corner. So I do believe Bitcoin is getting ready to break down to the downside right now. If we do look at the weekly time frame, you can see we've been in a very, very boring sideways chop, and this is also a massive bear flag at this moment in time. But there's only so long that this can hold in at this moment in time. I mean, if we look at what's going on with the S&P 500, the S&P 500 isn't in a bear flag. The S&P 500 has been nuking for the past month, just like we've been talking about. And also, if we come over, like I said, I want to make, I don't really want to make TA on this. Oh, wrong chart. The TIP ETF is absolutely nuking to the downside right now. And if we are looking at our government bonds are also breaking out of a lot of very bullish patterns right now. So all of the markets, you know, well, your bond markets are bullish, which is of course bearish for the S&P 500. The S&P 500 is nuking, and Bitcoin is kind of just teetering on the brink of death at this moment in time. And it looks like we're finally going to get, it looks like we're finally getting ready to snap back down to the downside after we have, of course, completed this liquidity grab and rejection from Bitcoin's previous all-time high range. So that's really all I've got for you for this video. I also did just want to quickly say, if we are looking at Bitcoin open interest in terms of futures contracts and derivatives, most of the time these track perfectly. So you can see spike in price action also, you know, correlates to a spike in open interest. But right now, if we're looking at what's happening for the open interest and the price action, kind of hard to see here, but we're seeing a little bit of a divergence. Price is moving to the downside, and open interest in terms of derivatives and future contracts are heading to the upside. Now, to me, pairing this with the fact that, you know, we are in a dominant long sentiment right now for the funding rates, it tells me that there's going to be a lot of interest in the immediate short term, and this is probably what's already kicking in right now. Open interest for swaps, derivatives, and futures are increasing while fund rates are in the positive, meaning I do believe a lot of people are going to be looking to take out futures contracts, a lot of short positions over on Bitcoin, a couple of options trades, and they're going to be banking on Bitcoin moving to the downside. And of course, the bulls will be paying the funding fees for the bears, which only sweetens the deal at this moment in time. I'm going to look and do a little bit more extensive TA on the charts a little bit later and see if I do spot any good trades playing out at this moment in time. But for this video, my friends, this is all I've got for you. Like I said, thanks for sticking around while I have been away for the past week. If you do want to follow me over on Twitter, I do post when I am away from the markets, or specifically when I am away from my computer, away from home, which tends to happen a lot recently. But if you want to head over to my Twitter, it is here at 618_cowboy. As always, it's been good catching up and touching base with you. I hope you all had a good Christmas. Hope you all had a good holiday season. And it is almost 2023, which means that my channel's been around for almost 12 months now. My channel was made round about the 12th or 14th of January, so we're really coming up to the 1 year anniversary, the 1 year birthday of this channel. So also, before we do wrap up this video, I did just want to say a massive thank you to everyone who's been supporting the channel so far. We're not even a year into the game, and we've almost got 8,500 subscribers, so I'm always eternally grateful for all of you, everyone who comments, you know, leaves likes down below. As my channel does explode, as I get more views, as I get more comments, more DMs on Twitter, more questions on Discord, I am a very busy person, so I do apologize that I really can't respond to a lot of you in the comment section anymore. It just is what it is. The more my channel grows, it becomes harder and harder to get back to you. But I did just want to say quickly, a massive appreciation to every single one of you. As always, it's been your boy Cowboy Trades. I'm out. Peace.